Do you remember when Visa cards first came out? You were used to paying with cash or with a check, and then a Visa came out. It was this weird payment system that you didn't understand. And she said, yeah, I remember that. Well, Bitcoin is just the next evolution of another payment system.
Brace yourself, Nakamoto was the foundation. What up, guys? It's your boy Nakamoto Crypto here, and today we got JPMorgan Analyst states that Bitcoin is likely to survive as a speculative asset now. Bitcoin has proved itself to be a resilient, if not stable, or a useful currency during March's global financial meltdown, according to one of the analysts of one of the world's largest investment banks, JPMorgan. Now, in a note to investor clients circulated on June the 11th and obtained by CoinDesk, JPMorgan's Chase & Co. analyst described how Bitcoin has shifted from a fairly uncorrelated asset to one asset whose price more closely tracks traditional stocks, guys. So Bitcoin has been going hand to hand, slowly, bit by bit, following the traditional stocks. Though correlations were modest and mostly mean reverting around zero for much of the past couple years, in recent months they have moved sharply higher in some cases, such as equities, and lower in other cases, such as the dollar and gold, Mr. Joshua Younger said. Now, this guy normally covers bonds. He noted that Bitcoin's success is outperforming traditional assets in March on a volatility adjusted basis. This report also found that liquidity on major Bitcoin exchanges was surprisingly more resilient than for a traditional assets such as equity or US Treasury bonds and foreign exchanges. The results of the analysis suggest that Bitcoin saw among the most severe drops in liquidity around the peak of the crisis in March, but that disruption was cured much faster than the other asset classes. This is absolutely pretty much true, guys. When we had that March drop and the world was upside down, big cities heading into lockdowns, the stock market took a big dip and Bitcoin went down with it, all the way down to almost $3,600 in some exchanges. But as fast as we went down, the crypto market pretty much recovered almost instantaneously. Think about that, guys. We recovered faster than traditional markets. So that means there is a certain belief in crypto going on there, outperforming almost every single asset. Even in a crash, we go right back up. I remember back then, that was only about 2-3 months ago. When we had 3K, within the next few hours, it was back up to 5K, and then 6, and then 7, until where we are sitting on right now. Stable coins whose values are generally pegged to government currencies got a brief mention and were described as relatively unscathed by the March turbulence. From March 2nd to March the 23rd, the S&P 500 plunged 29% as investors looked to cash out amid increasing concerns about the number 19. The JPMorgan analysts reckon that cryptocurrencies successfully passed their first stress test during this period despite volatile price action. During the March panic, crypto valuation did not diverge all that much from their intrinsic values, showing little flight to liquidity within the asset classes, the analyst wrote. While the market structure for crypto during the period was more resilient than its traditional counterparts, according to the report, Bitcoin did not quite live up to its reputation in some corners as part in a storm. There is little evidence that Bitcoin and others served as a safe haven Rather, its value appears to have been highly correlated with risky assets such as equities. Now, the report concluded this is all likely points to the continued survival of the asset class, but likely still more as a vehicle for speculation than a medium of exchange or a store of value, guys. Now, I have to admit there have been a lot of speculations with BTC since it was born pretty much. But one thing you cannot argue is its consistency in terms of returns. Just look at your average S&P 500 yearly returns and look at Bitcoin yearly returns. Up and down all time, BTC outperforms it every single time. Now that has to count, definitely, guys. So crypto definitely can be a store of value. It is a good commodity, even though a speculative asset class, but still a good store of value and a good commodity, says the guys who have been holding it since 2011, 2012, 2013 and made a whole bunch of money just a few years ahead of that during the 2017 bull run. Next, we got a record number of investors are holding at least 0.1 BTC. Data posted that Glassnode has revealed that the number of wallets containing 0.1 coins is posting a new all-time high for both Bitcoin and Ethereum addresses, guys. The number of investors with Bitcoins holding 0.1 BTC or more has broken into a new all-time high. The data published by crypto data aggregator Glassnode on June the 13th shows the number of wallets holding 0.1 BTC or more are reaching a record of 3,054,282, beating out March 21st previous record by 212 addresses. So the crypto nation, we are growing every single day, each and every single day. There is more and more people racing to hold 0.1 BTC, 0.01 BTC, 1 BTC, 0.5 BTC. This number has been growing. Look at this chart, guys. The number of wallets holding this is increasing and also falling as the 2017 bull run reached its peak with a new record above 2.75 million, consistently being set since April 2019. Now, from August 2017 until January 2018, BTC wallets holding at least 0.1 has jumped by 45%, from 1.8 million to more than 2.6 million by March 2015. The value of roughly 300,000 wallets had been reduced below 0.1. A noticeable increase in BTC wallets storing 0.1 coins minimum has taken place since February as the hype grew for Bitcoin's block reward reduction. Now, the number of ETH addresses holding 0.1 Ethereum or more has also been setting records in recent days, with 2,984,000 Ether wallets currently storing at least 0.1 coins has increased. Unlike Bitcoin, the number of addresses representing 0.1 coins was unable to reclaim its previous record until April of this year, having oscillated between 2.4 million and 2.7 million since March 2018. The last major bull trend drove an enormous increase in the number of ETH investors holding more than 0.1 coins, jumping roughly to 400% from 500,000 in August 2017 to 2.4 million by February 2018 alone. Imagine what that number is right now, guys. More and more people have been buying Bitcoin, and more people have been buying Ethereum. And this is right after the halving. Numbers do not lie. We have been outgrowing. Next, we got BTC transaction fees fall by 89% in under just 1 month. Data chart from BitInfo Charts shows transaction fees averaged 71 cents. That's a big drop from last month where they were as high as 6.65. Maybe that was just a halving hype, but last month Bitcoin fees has also tend to jump. Bitcoin transaction fees were sky high last month, but they have now stabilized, dipping to the lows previously seen in April. It now costs around 0.71 cents on average to make a Bitcoin transaction, which is good news for those of you who want to move your coins from wallet A to wallet B. But Bitcoin transaction fees are down. It is cheaper now to move BTC. It seems like every time the blockchain is clogged, there is more and more transaction and more people jump in. The fees go higher. I remember back in 2017 when Bitcoin was on its way up to 20K. We had just hit like 14 to 15 to 16,000, around 16, 17,000. It got to a point where it was very, very expensive to send Bitcoin, because it's like everybody was holding it, everybody was trying to buy it, and the transaction fees kept going higher and higher to the point where people are saying the Bitcoin blockchain, the Bitcoin network is slow, the BTC network is really, really slow because people are still waiting for their coins to hit their wallet. And that shifted the whole narrative. The energy shifted towards the alternative coins. I remember Bitcoin Cash went as high as almost $5,000 per coin. Little Litecoin went up to $300 per coin. So people the energy shifted towards the alternative coins, if you remember. So Bitcoin's scalability and transactions and whatnot, people need to work on it a little bit more, because the next bull run, people do not want to see these kind of problems like high transaction fees and whatnot. Imagine 100k BTC and people are struggling to send coins around. People are struggling on the Bitcoin network. These kinds of issues, they have to be solved, guys. And on that note, if you like the content, please don't forget to leave a like, share, subscribe. I've been your boy Nakamoto, and I'm out.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin is over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Best performing asset in the last 10 years. True. Look into crypto, we need volunteers. No need to tiptoe, it won't disappear. Do your research, history made it clear.